Jim Rogers, author of Street Smarts and Adventures on the Road, joins us now with his take on the global setup. Jim, an absolute pleasure and a delight to have you back on ET Now. For now, the US Federal Reserve is likely to follow a loose monetary policy. Do you see this as a booster for Asian equities? Because in the short term, all financial markets are a function of global liquidity.
Well, you've got, for the first time in recorded history, you have all the major central banks in the world printing money at the same time. So the world's floating around on a huge artificial lake of liquidity. It's got to go somewhere, and most of it's going into markets. The world economies are not getting so much better, but the markets are certainly much better. Everybody, nearly everybody, because of all this money printing.
Jim, hi, morning. So when do you see the Fed likely to start tapering, and whenever that happens, can emerging markets take the hit?
Well, no, of course. If and when the Federal Reserve stops or even slows down printing money, it's going to have a moderating effect on markets, because that's where most of the money has gone. And especially if other central banks also slow down. I don't think the Japanese would slow down, but maybe the English or maybe the Europeans would. When it happens, if it happens, I should say, it's going to moderate many markets around the world. But I want to remind you, I'm not sure it's going to happen, because even if it does happen, well, first of all, Bernanke's not going to do it while he's here, because he doesn't want to go out with an egg on his face. And then Mrs. Yellen's coming in. I doubt if she's going to do it at first anyway. A, she's keen on printing money, and B, she knows, well, I hope she knows what will happen when they start slowing down. So she's not going to do it anytime soon. And if they do start slowing down, the markets are going to react, and I would suspect that they will panic and come back in and say, oh, we're sorry. So I don't really see much tapering anytime soon, if ever. Well, not if ever, it's a long time. The market eventually will force them to cut back. Eventually the market's going to say, we don't want this garbage paper anymore. We don't want to play this game anymore. And then the market will force central banks to stop printing all this money. But I don't see that happening anytime soon.
Jim, India also has been struggling with very high inflation and liquidity tightening by central bank. What is your outlook on India?
I'm not very optimistic about India still. It's, you know, if you can visit only one country in the world, you should go to India, as I've told you before. It's a wonderful, wonderful country. It hasn't been very well managed for decades now, in fact. So I'm not terribly optimistic about India, other than the fact that there's all this money printing around the world, and some of it's going to slosh into India. Some of it already is sloshing into India. But as far as the economy is concerned, you need new politicians.
Jim, you've been bullish on agro-commodities. What's your view on sugar as well as tea?
Well, I own sugar. I bought sugar not long ago. Tea, I'm really not up to date on tea. There's no futures market in tea, so I don't pay too much attention to tea. I am optimistic about coffee, cocoa, so I presume the same economics will apply to tea. Coffee is certainly down a lot, and it's one that one should consider buying. So I would say, if it's the same with tea, I suspect one should consider it. But I definitely have bought sugar, and I definitely do own sugar.
Jim, food inflation level in India is at a multi-year high, even though we've got a good monsoon. Much of the higher prices are due to rupee volatility. With agro-commodities, do you see moving higher in the near term because of demand-supply mismatch?
Well, I'm very optimistic about all agricultural products. Near term, I don't have a clue. You should watch ET to find out what's going to happen in the short term. I'm a very, very bad short-term trader, very bad market timer. Watch ET. They'll tell you what's going to move up in the short term.
Right, Jim, but gold is heading for its first annual decline in about 3 years, or rather 13 years, I should say. Is it a good time to, to buy or stay away?
I'm not buying gold. I own gold. I've owned gold for many years. Part of the reason that I'm not buying now, gold went up 12 years in a row, which is extremely unusual for any asset. I don't know of any in history that's done that. It went up 12 years in a row without a decline. So I suspect that the consolidation, the correction in the gold market is going to be somewhat of an anomaly as well, because since the 12-year rise was. And of course, you know, India's doing its best to kill the gold market. They're trying to make sure that Indians don't buy any more gold, don't import any more gold. They're trying to figure out a way to make Indians sell gold. So while the Indian politicians are fooling around with the gold market, it's another reason that I'm not buying. If it goes down to under 1,000, I hope I'm smart enough to buy a lot more.
Jim, China and European Union issue seems to be bottoming out. Is it time for a rebound in base metals as well?
Yes, I'd rather buy base metals now than gold, for instance. I mentioned gold. I'll tell you my reasons for not buying gold at the moment. But base metals are down substantially. There is all this money printing, and some of it's working its way into the economy. Some of that money will go into base metals as a way to protect ourselves against inflation. So against inflation and currency debasement. So yes, I would much rather buy base metals than precious metals.
Jim, last year we saw gold and crude both decline while most base metals were up. How would you see the trend now for, say, the next 1 year?
Again, I'm a terrible market timer. Watch ET. I would suspect that base metals will be stronger in the next year. If I had to buy them, I would.
Jim, finally, with tensions in Middle East subsiding and higher inventories from US, do you see a supply-demand mismatch to continue for the oil market?
Well, there is a certain excess supply in the crude market at the moment because of the shale boom in the U.S. I'm not sure how much longer that's going to last because those wells are very short-lived wells and the production declines pretty quickly. But at the moment we certainly do have a glut and we could very well see lower prices. But don't sell your crude because if prices go lower, first of all, it cuts back on the shale because shale has to have high prices in order to bring it to market. And second, oil is going to go much higher over the decade. Other reserves around the world, known reserves, are in decline. Every other field in the world has declining reserves. Every other country in the world has declining reserves. So this is a temporary thing.
Good chatting with you, Jim, and good to have you on the show today. Thanks as always for taking time out and speaking with us.